So now we have Singapore dollar versus the Japanese yen, and we have what could potentially be considered to be the first pullback in what is now an upward trend. And we've got last week's close as a bullish pin bar reversal as a potential entry point for this protracted long. So if we did decide to take this as a potential first pullback or retracement in what is now an upward trend, please bear in mind we just had the bullish golden cross with the 20 crossing up above the 200, and it's en route to do the same potentially with the 50 moving average as well. So how are we going to play this one? Okay, remember that we took advantage of this trade here all the way back in November 2016 last year with our entry above the high here, stop loss below the low. We noted the bullish reversal divergence here and the size of this bullish pin bar reversal, which took out the high and the low of the previous 1, 2, 3, 4, 5, 6, 7, 8 bars. So it's pretty bullish. We had the protracted move to the upside, which we took advantage of. Okay, the reward to risk wasn't that great given the distance between our entry and our stop loss, but for the bigger picture, as our first target was here, it got halfway there. It was a worthwhile proposition. So what we're seeing now is, since coming out of the trade around about here, we've seen this retracement, and if, put simply, buying the dip in what could potentially amount to be a long-term upward trend is the most efficient way to trend trade, then this certainly would be a very efficient entry after the first pullback. Okay, please bear in mind that if we decide to go long, the standard entry would apply, and we've got the bullish pin bar reversal representing an entry point for a long, for the continuation of this move to the upside. If our entry is a standard entry and is above the high of last week's close with our stop loss below the low, then it would be a significant event if we are triggered into the trade, because the weekly hasn't taken out the high of the previous week's bar for or since the last 1, 2, 3, 4, 5 bars. Okay, and that would be significant. So if we place our entry above last week's high, stop loss below last week's low, then that would be a significant event if we are triggered into the trade. The bullish pin bar reversal with the iconic tail telling us that last time bears fell to this point, that the bulls surged in and caused price to close, or caused the bar to close in the top half. That is significant again in collaboration or corroborating the trade idea. So if you did decide to take this long, then the first target would be the previous swing high here. That's a decent 2 to 1. That's a worthwhile proposition, or just more than 2 to 1, 2.5 to 1, I'd say. Okay, bearing in mind your entry here, stop loss here, first target here. So at this point, you might decide the choice of two options. You can either, for a high probability, lower reward outcome, take all your profit here and just exit the position fully, or if you wanted the best of both worlds, then of course sell back half the position, sell half your profits, leaving half to remain for further gains all the way to the upside. Remember, our first profit target was all the way up here, so with the original trade back in 2016 in November, that enormous pin bar reversal. So the reward to risk potential is still pretty damn good, irrespective of the fact that you've got a full 2%, supposing you do risk 2%, beyond this point here. Okay, so that is Singapore dollar versus the yen. And that concludes this week's Market Insider. Hope you have a fantastic week ahead. Any questions, drop us a line at tradingfloor@thelazytrader.com.